It's Wednesday. What's up? So this is Dida over at The Office Squad, and for the next couple of weeks, we are going to talk on Wednesdays about the top 10 things that we bookkeepers see that are done inaccurately in your QuickBooks. I call it the I did it myself mistakes. So number one, we talked about last week, was the chart of accounts, not knowing what it is or what the heck it matters in your QuickBooks. Today we're going to talk about number two, which is what's the balance sheet. So if you are a small business owner and you are looking at your numbers, and you're probably looking at the balance in the checkbook and your P&L, your profit and loss as it's called, sometimes we call it the income statement. But that's not the only thing you need to look at, because if you created your chart of accounts correctly, you'll know that there are lots more accounts than what's on your P&L. So your P&L, look, I get to use the whiteboard. Your P&L, oops, has your revenue, your cost of goods, and your expenses. And then it tells you if you made a plus or a minus that month. But you're probably looking at your P&L, and then you're looking at your checkbook and going, I don't have all the money that this says I should have at the end of the month. Where's the rest of it? Well, there's a little thing called the balance sheet. You could call it BS for short. This financial document has your assets, your liabilities, and your equity. How do you spell that? There you go. So you're putting data into your QuickBooks, and you don't always see the other half of it, because QuickBooks has a debit and a credit. You're probably only seeing one side. So you look at your P&L at the end of the month, and let's say, for example, it shows you got a $2,500 profit. But when you look at your checkbook, you're not seeing this same number. Why don't those jive? Well, because you're only looking at the revenue, the cost of goods, and the expenses that you put into your QuickBooks. The balance sheet has the assets, the liabilities, and the equity. And here's what gets a lot of us small business owners. We take draws. We don't take a paycheck. You might put money in the company and take money out of the company. That's on this report. It's not on this report. But it does come out of the checkbook, right? So for example, you pay yourself $500 every Friday, and that's going to come out of your equity account if you set up your chart of accounts right. So let's say you paid yourself $2,000, and you subtract it from over here, and you really only have a $500 profit, which might be closer to what's in your check register. So that's a balance sheet. When you look for your financials, you need both of them, the P&L and the balance sheet, and then your checkbook might look similar. I hope that helps. That's your checkup for today, and next week we'll cover number 3 on What's Up Wednesday. Have a good one.